Hello, everybody. I had music playing and then it just stopped. I don't know what happened. I don't have Eddie here. There's no producer, it's just me. And we're going to be talking about, there it goes, music. And we're going to be talking about everything that's going on in the housing market right now. And apparently, sellers are dropping their prices, according to Fox News. We're going to be talking about that a little bit more. We're talking about something else that's out there. I saw this one headline that was talking about how Black Friday sales in the home market. And it was weird because it was like the same broadcast on different stations around the country. So who knew that the media could lie, you know? I do see there's some people that are already in the chat. I do want to welcome some people. I heard that there's one person from Ohio, another one from Georgia. I know somebody that from Pennsylvania is in the chat. So just without further ado, go ahead and in the chat, tell us exactly where you're coming in from. I want to see, because they're talking about the home prices across the country. So if you see me looking off to the side, like I said, I am doing this on my own. So I have to look over here to my right to see the comments. So, I know that won't mean much to you on the podcast, but I want everybody's voices to be heard during the stream. And let me go ahead and turn off the freaking music. All right, done. We're turning it off. We're turning it off. All right, let's see. All right. Well, first I want to mention this one. So Frank says the economy hasn't even hit the skids yet, and yet already we're seeing things crumble. The crash is coming in and coming in hot. So before the stream was coming in, I went ahead and asked him, like, how low do you think it's going to go? Because a lot of people have been saying this, and he says that we're heading towards a multi-year turndown, distressed sellers, investor exits, and demographic shifts. We'll see a 50% drop or more in Texas and in Florida, worse than the 2008 crash. So, yeah, and apparently he's got cash to buy. I'm interested to think, like, how many do you think it's going to be worse than 2008? I definitely think there's going to be a price correction in many, many areas, but I don't think it's going to be as steep as a lot of people are saying or predicting. The only way that I could see that happening is if we have a huge downturn in the jobs market. I mean, I'm not going to say that like the prices are going to go up, tremendously. But one of the funniest things I saw this year, this week, I'm going to show you this. I'm going to type it in right now. NAR, National Association of Realtors, says that the housing market is going to be like, it's going up in 2026 is what they say. This was the funniest thing I read last week. All right, let me show you this because it was crazy to me. All right, share screen. I'm going to go ahead and do this right here. It says that 2026 is coming for a comeback. Predicts that it's going to be higher. I talked about this last week, but I just thought it needed to be said again. The main reason, and this is the part that really made me laugh, is that it was talking about job growth. He said that the jobs remain stable. And I'm like, what headlines is this dude reading? Because everything I've been listening to is saying something completely different. And I respect this guy. I mean, he has a lot of good predictions and a lot of, but this one, I think he really missed the mark. But who am I? Who am I in the grand scheme of things? So, all right, we'll stop sharing there. All right, let's say hello to some people in the chat. My daughter uses this room and it's full of trash. All right, let's see. We've got, I got to put on my glasses. We got Cynthia. Hello, how are you? They just sold their house in Seattle. Let's see. We got Lawnmower, our commentologist. If you ever need a funny comment, here's the guy. I've been watching in my part in Texas. The houses that have dropped in price have either become a rental by owner or someone has put a bid over market price and then they turned it into a rental. Now I'm seeing a lot more rentals. I'm seeing more investors buy recently. And that surprised me because prices are still incredibly high. but they're apparently finding deals out there. Now, the wholesale market is picking up steam. So, be on the lookout for that. They're looking for those desperate sellers that are in a bind, that don't want to fix up their house or don't have the money to fix up their house. So they offer them a price to get them out and get them out fast. I caution anybody doing this, because I know that you're in a predicament to sell your home quickly, but a lot of times, the reason why they're wholesalers is because they get it at a discount, and then they rarely even do any kind of like anything to fix it up. And then they sell it to the next investor to make money. So they're making another $10,000 on it. So they're just flipping it without doing anything to the property. And you could have made that extra $10,000. I strongly suggest at least getting a CMA, which is a cost market analysis, from a real estate agent that comes to the house and gives you an estimate of how much the house is evaluated for at today's market, current value of the market. And then if you're wanting to sell it fast, then go under that market value to get it sold quickly, before you really get into that predicament that you want to sell to a wholesaler, because all they're going to do is just take you for a ride, and then they're going to make the money off of it, and it was your money to begin with. I'm just saying, not all wholesalers, but that's their business model. That's the business model. So, Eddie, hello from Pittsburgh. 34 and overcast. Yay. All right, we got Frank again in the chat. Who else we got? MH08, how are you? Chilly, 24 degrees in Denver. Any snow? Somebody says it's a rave. I love rave. I am a rave girl. I can throw around some glow sticks like nobody's business. I'm just saying. So, you gotta turn down for what? I turned on the music. Yep. Yeah, the music was too loud. I'm so sorry about that. So sorry about that. Phew. So, all right. All right. Let's see here. We got SB. Hello. No, not worse. They'll never happen again. Oh no. What's in your bundle? I don't know. What's in my bundle? Y'all are funny. All right. Lawnmower says, I don't see a downturn in the market, price correction, crash, etc., bringing in any opportunity for individual home buyers and buying houses. Okay. So let me show you what this article from Fox Business is showing us. So, oops, let me go ahead, and this is so hard to do by myself. I got really lucky by having Eddie here all the time. All right, here we go. Oh, all right, let's try that. Why is it doing that? So crazy. Whatever. Okay. All right. So Fox says home buyers score record discounts as sellers slash prices nationwide. Housing market rebalances.
In Los Lunas, most people.
Of listings offered prices, report says. Zillow found that the typical listing in the United States, it had a $25,000 cumulative price cuts in October, which matched the largest discounts the company has ever recorded. The typical size of an individual price cut is a little change from the recent years, around $10,000. But the report noted that sellers are adjusting their prices more frequently, with listings taking longer to move. The share of listings with the price of 26.9% of the U.S. listings, according to the report. Most homeowners have seen their values soar over past several years, which gives them flexibility for price cuts while they were still walking away from the profit. Yes. Yep. These discounts bringing more listings in line with buyers' budgets and helping fuel most active housing market in 3 years. Interesting. So they're saying that the housing market is becoming more active because sellers are willing to take these price cuts. Are you guys seeing that in your area? Because I don't know about that. Patient buyers are reaping the rewards of the market continues to rebalance. Zillow noted that the areas with the largest median discounts from initial listing. Prices were, oh my God, I hate when it does this. Prices were located in some of the most expensive housing markets in the country. Cut by sellers in San Jose, about around the median price cumulative discount was about $70,000. Other metro areas like California saw sizable median reductions in Los Angeles, San Francisco, about $50,000 in San Francisco, in San Diego, in New York City, and New York City saw a cumulative price cut around $50,000. In some metro areas, home sellers haven't had as much flexibility to reduce prices. The smallest cumulative median discounts in October were Oklahoma City with 15,000, Louisville with 15,000, St. Louis with 15,000, Indianapolis with 16,000, and Detroit with 17,000. Aside from Oklahoma City, those metro areas are seeing homes sell faster than the average listings. I wonder what's so busy. What's Oklahoma City have that no one else has? They're faster than the national average listings and tend to be newer, which indicates there's a steady demand and sellers don't need deep discounts to attract buyers. Markets which had less costly homes to begin with tended to have a bigger relative discount. Okay, so Pittsburgh had a typical $20,000 markdown with a 9% of the metro's typical home value, which was the largest relative discount among the major markets of Zillow's report. I didn't see that. Eddie and I didn't see any of that. All right, we just bought a house in Pittsburgh. No, we didn't see that. New Orleans had a discount of about 9% relative to the typical home value in the market, while buyers saw similarly sized cuts in Austin, about 8.4%, in Houston and San Antonio. So, I mean, I don't know. Some of this, I want to know where they get some of this stuff, where they get some of their information, because I did not see a 20% or $20,000 discount on any houses. No, I say, oh, okay. I guess the wording is wrong, because it's like, it says cumulative. So it's like across the board. If you add that word, maybe like $5,000, but that was like right when November started, like the end of October, because they know that people don't really buy because they have seasonal buying and selling too, right? So like as soon as the end of October into November, people were taking like $5,000 off of their selling price just to get it moved, because they wanted to get moved before the Christmas season. So I get it. All right. Are you guys seeing discounts in your area? I know here in Louisiana, we are not seeing them here in like Baton Rouge as much as we are in like New Orleans, St. Charles, Monroe, those cities. Those St. Charles, Lake Charles, not St. Charles. Lake Charles is getting hit. They're having some adjustments, that's for sure. All right. If you guys have a question, please make sure you write the word question first, because that's the only way I can see it in the chat easily. I'm here by myself, so there's nobody here to put the questions on the screen. So go ahead and put the word question first. Are you guys having a conversation with each other in the chat? That's so cute. I love that. All right. Before the year, here we go. Dean says, before this year, everything that went up for sale sold immediately. I wonder what area you're in. Now, like in our area, if you have a nice house and it's well kept, it will sell. Doesn't matter the price range. Now, I will tell you, if your house has a bunch of what I call deferred maintenance. I love that expression, meaning that you have like broken windows and, chipped paint and, like it needs a whole redo. Those ones sit on the market. They do. They do. Lee says, last time I was in Milwaukee, November of 2022, they were barbecuing and wearing short sleeve shirts from Halloween through the 1st of November. Week later, they were out with shoveling snow. You know what? I've noticed that in the Northeast. one week is like 57 and the next is like 27. Yep. All right. Now the signs are sitting in the yards a year long. Nothing is selling. I want to know what area you're in, Dean, because like I will say that I think a lot of sellers for last year and even the year before were in a land of delusion. You remember that old video from Genesis? The land of confusion. Well, they're in the land of delusion because they heard about home prices being like at some level, and then some neighbor sold their house for 500,000, and they were wanting that 500,000 because they were like, well, I have a barbecue pit and I have a backyard living room and all this other stuff, and they weren't willing to adjust their prices accordingly because the market has shifted, because they felt like they had all these extras and their houses should be more. But I think a lot of them have become more reasonable. Now, I've heard some people get some really good deals, though. Sellers are becoming more realistic in their home pricing, and they're willing to give like discounts on maybe not just the price, but on the like concessions, like closing costs. Sometimes they'll buy down a point for you. I mean, anything to get the house sold. This is the time of year, though, that sellers, that if they need to, like, they need to sell right now. If they have their house on the market during Christmas time, it's because they have to sell. So that's like a prime opportunity for you as a home buyer, if you're in the market, to start looking at those people, because they're going to be like, oh yeah, tell me what you want, what you really want. They're in it to win it. They're ready to sell. So if you're in that home buying experience right now and you're wanting to buy a home, throw an offer to the seller. I know that some people say, oh, I don't want to offend them. I don't want to offend them with an offer. It's just numbers on paper. And I explain that to my sellers, and I explain that to the buyers. Whatever you think is a fair offer, and you're wanting to put that on the paper, just put it on the paper. The worst they can say is no. And if they say no and they reject your offer, you can go back and make another offer. It's in today's world, it isn't even paper. It's just digital. It's all digital. So just put the number on there, and the worst they can say is no. And go from that. My mom once got an offer that she was offended by, because she was like, oh, well, he kept saying he was paying cash and that's why he offered so low. And I'm like, I don't know why you're offended. He was just trying to get a deal. But have you ever been offended by an offer that you got on your house? I have not. All right. Brian says, typical price reductions happen right after you buy. Yeah. True. True. I still feel like I feel like we got a good deal. I like the little house. I think it's great. Yeah, I think your light source is your monitor. It is my monitor because, again, I have to run both monitors right now. So that's why I look a little red, because if I try to do this, I'm going to look like a washed out ghost. It's going to look really weird. So yeah, my light source is my monitor. So, all right, we got a question. Spicy P says, question, have you ever used all-in-one loans? I am unfamiliar with an all-in-one loan. So why don't we all learn something together? I'm not a lender. So I don't usually like make any kind of comments about like any kind of loans. And you got to remember, every loan is going to be different for everybody's individual needs. So like a loan that would work for me would not necessarily work for everybody. A lot of home investors use like interest only loans, and you're like, why would you do that? Because you're only paying the interest while you're fixing the house and you're flipping it, and then that way when you sell it, then you don't lose any money, right? So there's a loan product for just about everybody. So let's find out what an all-in-one loan is. An all-in-one loan, no other mortgage product does more to lower costs and maximize the benefits of home ownership. What is it? It is a 30-year HELOC with integrated sweep checking account. In other words, it combines your home's financing and personal banking needs in one dynamic tool. Ooh, I'm going to have to find out about this more. I've never heard of this in my life. All right. Speaking of light source, I know I'm going to be really bright now. How it works. Let's look at this. I'm not watching the video. It says, if you're like most Americans, you probably earn more in 5 years than you owe on your mortgage. But cash is depreciating asset. And despite low interest rates, mortgage costs copious amounts of interest, not to mention delay the progress with building home equity. An all-in-one loan is a solution to both obstacles because it combines two into one fluid financial instrument. As the nation's only 30-year draw home equity line of credit, a HELOC, with its integrated sweep checking account, it puts your income to work to lower your mortgage daily mortgage principal and monthly interest costs. Someone needs to explain this to me like I'm a 5-year-old. So it works like a checking account, and then your interest that you use from your checking account goes towards the principal. Is that what I'm understanding? Or is it allowing you to tap into your, I'm assuming that's allowing you to tap into your equity stake in your house easier. But how would that be any different than any other HELOC? I gotta look into this more. Maybe someone smarter than me about loans can explain this. But anytime that I've ever had a HELOC, it came with a checkbook. And you basically writing checks for everything that you need from that HELOC. And then you get a statement telling you how much you owe that month when you use the HELOC. We've had HELOCs on our houses. We've never used them. We had them just in case, like we found a rental house and we needed to put down a deposit, who has like an extra $10,000 laying around. We wanted to be able to tap into the equity in our house if we needed it. But we've never used it. And that's how it worked with a regular HELOC. So this is something new to me, an all-in-one HELOC mortgage. MHOA says, I quit paying attention to Denver real estate values about a year ago. Next stop is out of Dodge. You moving? Where are you moving to, MHOA? I want to know. Yeah, this is true, Robin. Robin says that here in New Jersey, it is still expensive. I know. And homes are still going over asking price and multiple offers. And if you're in the lower price range, they're flying. Melissa says, I have a neighbor whose home has been for sale for 6 months. And 2 months ago, they raised the price by 10%. Okay, so I'm going to tell you a story, a little local gossip. There's a house in my neighborhood that has been for sale for 2 years. And I'm like, what? And of course, I'm like, I got to find out the history. So you go through the history and it was 6 months with one company and then 6 months with another company. And then when the other company took over, they actually raised the price $10,000. And then they went with another company. Then they went with another company. And that company kept it at the same price as the first company. Now they're with company number 5 and they have reduced the price quite a bit under market value. So it'll be interesting to see what happens. All right, here we go. John's Denver song, Rocky Mountain High, because you got to be smoking blunts to buy now. Okay. KLRB Properties says Southern Indiana is reducing prices. Not many selling, according to my realtor, due to vehicle manufacturing industry in our area. Huh? Was that a new business area? I wonder how many people are investors that are purchasing. It's you roll your debt into the mortgage. Oh, so if you had high credit card statements, you get a HELOC and roll that into it. Sounds dangerous. Sounds dangerous. Leanne Law says, answer yes. I have been offended when I found out my realtor submitted a fake fraudulent offer. We did win in an ethics complaint. Holy cow. Ooh, I would have loved to read that story. Occasionally I do this thing on this show where I talk about some gossip, some real estate gossip. This was some good real estate gossip, Leanna. I want to know. So in the state of Louisiana, verbal contracts are not, you can do, as long as it's written on a piece of paper, napkin or whatever, you can fight that, but verbal contracts don't count. And I've had people like make a verbal offer over the phone, and I'm like, I can't physically submit that to a home seller, but I can pass along the information saying that an offer is coming in and they're offering around this much, but we don't know. And I always preface it like this: that's what they say now. We don't know anything until something's written on paper. So give it to me on paper, and then we'll talk about it. But this is what they're saying right now, so you guys can discuss it and think about it before the offer comes in. But I've read before that some real estate agents in the past have done this, or they have submitted an offer because they thought that that's what the buyers would want, or they got the okay from one of the spouses. So the husband said, yes, go ahead and put it in for 300,000. But the wife was like, no, we weren't going to go over 290. But they went ahead and submitted it with both signatures. I don't know how they did that, but they did it. Yeah. Happy Sunday to you, Clark, the Realtor. I have to know, Clark, are you going to be doing a live stream today? If so, everybody go over there. Say hello to Clark. He's out of Hotlanta. So MH08 says you have your paycheck deposited into the account, and then you build a savings that lowers the balance you're paying interest on. Thank you. Thank you for explaining that to me. I don't know. Does it seem dangerous to you to have a HELOC where you're just kind of putting everything in there? I don't know. It seems dangerous to me. I don't know. Muddy Sneakers has a question. It says, Kristina, what data sources opinions do you use for your show, the contrary to the views on the housing crisis? So I'm in a lot of different groups outside of YouTube, and the news does one thing. They do their own analysis, and then you have boots on the ground of real estate agents, real estate investors, home builders, and we meet every Monday. There's another group that meets on Wednesday, and we're talking about actual things that are actually happening right now in the housing market. And they're better predictors than what the media is. As well as I do, whenever a headline is out there, the headline is intended for you to click. And they know that for a fact, the optimism isn't there in the economy overall. But they need people to continue to purchase, whether they're purchasing insurance, whether they're purchasing food, whether they're purchasing anything, especially housing, because that drives the economy and the housing market. So it would behoove them, when they see any kind of signs or ripple effects in the housing market where it makes them feel icky, to start putting out headlines of, hey, you better get in fast. Because if in the truth of it all, they're salespeople. And what are they selling? Their product is to get more houses sold. So if they put out a better headline that the optimism is there for the housing market, it's going to encourage some people when they read that to say, you know what, maybe I shouldn't sit on the porch anymore. Maybe I should go out there and start looking at houses. They also are very optimistic that interest rates could come down. I was dead wrong, because when I, at the beginning of this year or the end of last year, when I said that I thought mortgage interest rates were going to end up in the 8s, at the high 8s at that. Never happened. I was wrong. Dead wrong. It got high, but it didn't get that as high as they said it was going to. Now we're seeing some adjustments. But it's all based off of numbers that we do not have right now. So what's going to happen with the 10-year treasury yield, the 30-year treasury yield? We don't know, because we do not have all the numbers that we need to have. We don't have the jobs numbers. They're not releasing them. So everybody's kind of taking an educated guess from other outside sources to figure out what's going on. If we continue to see problems with the job market, you're going to see a lot more people, sellers included, that are going to have no choice because they can't pay their mortgage to either sell or become foreclosed on. We've already seen an uptick of foreclosures. That is not a good sign in the housing market. And I think that when you're putting that kind of information saying, 2026 is going to be a great year, according to the National Association of Realtors, I think it's, to me, it feels delulu. It feels delulu. I would love to be wrong about this. I don't want to see anybody lose their home. I do not want to see a crash of 2028. I saw so many families lose their house because of an economic downturn. But as prices continue to go up just to live, or if you get sick, you're going to see more people become foreclosed on because they're in an economic crisis. And that always is reflective in the housing market. So that's where I get a lot of my data from. Boots on the ground. All-in-one loans is any dollar amount in your checkbook is applied to your owned amount of your home, allowing you to save on interest to pay your home off. Is it a good idea? Oh, I'm going to look into that more. I've honestly never heard of it, and I have no problem admitting that. It sounds like a checking account that has connected to the HELOC and overdraft protect. I can read, I promise. Sounds like a checking account that has connects to your HELOC as an overdraft protection. Yep. So I'm a realtor. This is user IY7PW7HHH1X says I'm a realtor in South Central Wisconsin. Prices are still fair enough. My current listing sold within 2 weeks over asking. Client and buyers got a great deal. Knowing the market and pricing it is key. Correcto mundo. Correcto mundo. All right, here we go. Every dollar from your checkbook sits in it instantly shrinks your loan and saves you on interest. And when you need the money, you just put it back into a debit card. Huh. Wow. I don't know. I kind of like that. I got a lot of equity. I'm gonna look into it because there has to be a downside to everything. There's a downside to everything. Oh. Oh, this is so interesting. I've never heard of this in the US before, only abroad. Somebody says, I would not do that HELOC deal. Noreen, why wouldn't you do it? And then MH08 says, if you have discipline, I can see making it work. Let's see what Brian had. Brian says it depends on the money you have saved is insured in case something happens to the company. If you want to have your eggs in one basket, but someone else is holding that basket. I'm gonna find out about it more. I'll report back to you next week when I've dug into this. That is something I have never heard of, and it sounds very intriguing to me. All right, SS Stewart says, in my opinion, sounds like every paycheck is used immediately for the principal. Then you write checks on the HELOC. But if your mortgage is 4% and the HELOC is higher, interest is a gamble. Just guessing. Yeah, so exactly, because the HELOC, sometimes HELOCs are adjustable rates. So they follow what's market conditions. So if you had a 2.5% interest rate on your mortgage, and then you're borrowing against it, and it's like 6.7%. I don't know. Yeah, just like anything, it's a tool. It's a tool. For some people, it would be work. Somebody said it's called clickbait. James, we're not clickbaiting. We're talking. Proud Liberal 24 says, make sure you can afford property tax, repairs, insurance, HOA fees, and utilities in addition to mortgage if you plan to buy. I see many people only accounting for the mortgage. Oh, I'm going to pull up this thing. So, dear Horton suing for escrows. I want to show you this article. All right, here we go. All right. I'm going to show you this because this is very interesting. And I don't blame the buyers on this because a lot of times I'm like, why didn't you look into this? This really wasn't their fault. So when you're new to buying a house, you're unaware of how certain things work, right? So you're assuming when they tell you the price of the house and what your monthly payment is going to be, they're going to just tell you the price. So if you said they told you it was like $1,027 for your mortgage payment, you're like, wow, that's so much cheaper than renting. I'm so happy I ended up getting into a house. The following year comes around and you get a note from the mortgage company. Your mortgage payment is now, $1,400. And you're like, what in the world? And it's because what happened was this. D.R. Horton and I believe Lennar was another one, sold homes not accounting for the cost of what the property taxes were going to be for the following year. Because the first year that they bought the home, they were only paying property taxes on the land, not for the house itself. So then, of course, it resets once the tax assessor comes around and assesses the tax value of that home. So there are people that genuinely thought that their mortgage payment was going to be around, 1,100. They knew it would go up some because things change, home insurance gets expensive and all this, but not that much dramatically. So they're getting sued. I feel bad for them because a lot of times when people go in and they're first time home buyers, they're like, I don't need a real estate agent. I'll just talk to the salespeople. Salespeople say, hey, why don't you use our lender? So they use the lender that the builder offers. And then at the time of closing, they're using that builder's lender and title company as well. So all of these things that could have been avoided by using separate entities, and those things could have been explained to them, it was not explained to them, according to the lawsuit. This is according to the lawsuit. And they're not the only ones that are getting sued for this. Lennar is another one that's getting sued for this. So it says one defendant in the suit claims that he chose D.R. Horton home because with the promise that the payment was going to be $2,164.68. But that cost jumped to $3,136.33 when his new mortgage servicer did an escrow analysis that included all the property taxes plus all the back taxes. Other defendants claim that they were promised a monthly payment of $2,602, which they agreed to because they said it would lower than other homes in the similar price that they were considering. However, they said the monthly payment now is increased to $3,439.07. Well, after they did an escrow analysis, D.R. Horton's responded to the allegations saying that D.R. Horton and DHIR Mortgage strongly disagree with the claims made in this lawsuit, and we intend to vigorously defend against D.R. Horton and DHIM have been in, and will continue to be unwavered in their commitment with total transparency with our customers. Oh, fiddly sticks. Every time they ever say that, like anytime they say, we're going to have total transparency, I always create this like, yeah, yeah, I believe you. Do you remember years ago? What is it? Yeah, that's it. That's the ticket. Yeah. But yeah, so can you imagine? First of all, the thought of a house payment over $2,000 makes me want to cringe. I couldn't do it. Just in the chat, in the roundabout chat, what is your mortgage payment? Just roundabout. You don't have to get the exact amount. Just a roundabout price. How much is your mortgage payment? It says, Seth says 50-year mortgage paid off, you will turn 80. I don't think that 50-year mortgage is going to be a thing. if it does come about, I don't think many people are going to use it. It was, I'm not going to lie, it was, the 50-year mortgage was not anything new. This has been proposed a few times. And the thought process is that it gets you into the door of buying a house. And then when you become more financially stable, then you could refinance under a 15 or a 30-year fixed rate mortgage. The thing, like I said, they've had the 40-year mortgage that it's been out. People don't use it because they don't save that much money. You really don't save that much. It's like a couple $100. It doesn't save you that much money to do it. The second problem with that 50-year mortgage idea is that it will allow for people to, sure, finance the house for even longer, but there isn't enough houses available for them to purchase in the first place. We have a shortage of supply for affordable housing. So you're wanting to encourage and incentivize first-time home buyers to buy their first house, but there isn't anything in their price range for them to purchase in the first place. Stupid idea. Dumb, dumb, dumb. And all the experts agreed, but it made a good headline. Noreen says she's not a fan of HELOCs. Yeah. All right, here we got another question. James says, question, when is it the best time to buy? And what's the best time to sell? Sorry, when is the best time to sell? Well, it depends on your market. So like typically in a roundabout way from April until about the end of September is the best window for home sales. That's when you're going to get the most buyers. And it's because it has to do with kids in school, believe it or not. So you have the most momentum during that time. But it's regional. Like, so, Florida doesn't see that dip in the winter time like they do up in Minnesota, right? Because, how many people want to be trudging through snow to see houses, so it's very localized. So it's always important for you to check with a local real estate agent in your area for the best time to sell. But typically that is during the summer months on average. I got a HELOC to develop land in Montana, sold, paid it off, and then have to have a plan. Yes, Seth, you're correct. A HELOC is a tool. Some people use it incorrectly. Back in 2008, back in my day, before the financial crash, I knew so many people that took out a second loan or second mortgage to pay off debt. They just took the equity from their house and paid off debt. And then they went on vacations, and then they got an RV and a boat and all this other stuff because they used their equity. The second thing I saw was people that used their HELOC and they were writing checks to go do all sorts of stuff. The 2008 crash wasn't just about people using kooky loans to get, into houses. It wasn't just those interest-only loans. There were so many different layers of what happened. The stock market was, those finance bros were doing all sorts of weird stuff. Housing mortgages were weird. People were over consuming and using their equity like an ATM machine in their houses. So, but a HELOC is a tool. If you use it correctly, it's fantastic. If you don't use it correctly, you can see what happened. 2008 happened. All right, I'm looking for questions in the chat. All right, here we go. Mary has a question. Question is early March, when it's bitter cold in Connecticut, okay time to sell? Barely anything is on the market this fall, and things sell fast when there's something to buy. I want to sell, but be smart. I was going to tell you to go ahead and talk to a local real estate agent, but I know that the Connecticut housing market is really doing well. So if you are, let me just put it this way. If you're wanting to move to that area and there isn't much to sell for sale, it's going to put your house up front, like front and center, because let's just say in the summertime, there's 50 houses for sale. But in this time of year, there's only 10. So they only have 10 to choose from that are in that price range. So it makes your house more appealing to those home buyers because they got to get something into something. I would talk to a local real estate agent in your area, but if it's available, I would do it. I'm considering doing it after I have a house here in Louisiana that I'm in right now. I'm considering putting it up right after Christmas. I just hate putting my house up for sale at Christmas time. Okay, so this was back to my question earlier. How much is your mortgage payment, right? Somebody says $2,000. Somebody says $426. Man, I wish. I wish. Somebody says that it's $850. Oh, somebody has their mortgage paid off. Wow. Congratulations. Somebody else has, oh, no, this says $900. That's still under $1,000. That's great. Patricia has hers at a 500 or just over 500. She purchased a condo in 2016. I have to know how are those association fees. I have to know. 980. Oh, this is what I thought most people would say. It was around 1450. That's what I thought, about $1,500. I thought the typical was going to be, but a lot of you guys are under $1,000, which I'm pretty excited about. Proud Liberal says, when I had a mortgage payment, it was $3,600. Oh, you're killing me. $3,600. Wow. Noreen rented a studio for $1,640 plus $50 in fees. Man. Somebody else under $1,853. Says hers is $2,249. I'm like, I don't know how y'all do it. I try to keep my mortgage payments under $2,000 because I'm like, well, that's how much rent is. So if I can just, as long as it's under what the typical rent is, I feel like that's the right price. So that's what I put down as my down payment. So it's like I adjust my down payment for as much as rent is in the area, and that's my house payment. So we're actually a little under that right now. $2,000 with insurance and upkeep. Yep. No mortgage, but the HOA is $1,635. Is that a month or year? That's high. Dang. Doesn't the Florida housing season start in January? Well, my day when I lived in Orlando, I worked with and helped my friend Connie Landers. She was Connie Watson at the time. Maybe she's Connie Watson now. Anyways, she the best season was all season. Because people vacation during the winter months and they really didn't have a lull except for the month of December. The month of December, Christmas time after Thanksgiving, that time, not so great. But then it always ramped up right after Christmas was over. Then, January started picking back up in February, March, April, May, June, July, August, September, October, November, then you start all over again. Like the summer months were always higher, but they don't really have like a massive downturn in home sales like you do in other states because of the weather. They've got optimum weather. Patricia says, my HOA went from $385 in 2016. After an assessment, though, it was $775. That's in North Fort Lauderdale. Well, that's actually not that bad. I've seen assessments. I mean, some people are like getting assessments of like $30,000. Wild. And I'm not even making that up. Mark says, up 26 times in the stock market in 8 years. Doubt if a home can do that. True. Yep. Florida insurance makes you get a new roof every 7 years, I hear. Some areas it's every 10. That like why would you even buy a 50-year roof if they're going to make you replace it in 5 years anyway, or 7 years? That's insanity. Coach Jerry says, I just paid off my land loan. Want to have a house built this spring. I know what I would like to build, but I don't know who to talk to first. A builder, a bank, a real estate agent. I have no debt by February. So you bought a piece of land, it's completely paid off. What I would do, I'm sure you already do have it, but I would get a survey done to your land so you know exactly where you want your house to be placed and you have a good idea about that. And then I would talk to a builder. You don't I'm telling you this as a real estate agent. You don't really need a real estate agent to tell you what you should do with your land. You won't need that because you already bought the land. You know what kind of improvements it's going to need. I would talk to an architect and a builder to build the house that you want, and then make sure you have that survey done. Yep. CB55 says, to clarify, one paid for, two mortgages totaling $2,000. That's good. You're lucky. All right, here we go. We got another question. Kay says, question, do you think Florida condo market will crash? Oh, define crash. I think it's in big trouble. And it is very reflective, in my opinion, from what I've seen. I was there the last time the last time it crashed, and it had nothing to do with insurance, and it had nothing to do with taxes. It had everything to do with they had overbuilt for the area. They were popping up condos like nobody's business all along Miami, Fort Lauderdale, Orlando. I mean, they had so much inventory. It was insane. Now think about all of that inventory. There's so much inventory and people are getting these reassessed fees. Some of them aren't as bad, like you saw with one of the viewers here. It was only, a couple $100, but other people are getting assessments of 30,000, 40,000, sometimes even 100,000 reassessment fee in the mail that they have to pay to the HOA. They have no choice. I saw a girl who bought in 20, got that reassessment fee. So she short saled her house and enrolled in that assessment fee into her short sale because she couldn't pay it. And I think that a lot of people are going to lose their home because they can't afford those reassessment fees. On top of the fact that a lot of people are having a hard time getting homeowners insurance. So do I think it's going to crash? I think it's going to have a massive correction. I do. And most of the price, like when you see the overall headlines, when it talks about Florida's housing market and the reduction of prices, they're accounting for condos and townhomes. And that's where you're seeing the biggest price corrections is for townhomes and condos. It's not like the single family housing like you did in 2008. It has a lot to do with the condos. So yes, in my opinion, yes, I think it's going to have a massive correction. Yeah. Deborah says her daughter's mortgage is $1,850. That's about as high as I would go. Cheese V says Florida insurance is lower if you have a metal roof. Metal. I have a friend that says it like that. Metal. Debbie says my community fees covers the real estate taxes, almost all major repairs, garbage, and a few others offsets to the cost. Not really an HOA, but it's second cousin. So you have like something like a co-op then. That would be like a co-op instead of an HOA. All right, I'm just looking for questions. Sorry. Oh, here we go. Proud Liberal 24 says, a question. What is better? Sell paid off house for $575,000 and invest, or keep renting it for $30,200 per month? Property taxes about $6,000 a year. I mean, what does the area look like? You would have to tell me, like, I gotta know some specifics. But I'm a big fan of keeping your rentals. I'm a big fan of that. Debbie says the crash is overused and not well defined. I don't see anything like 2008 style crash. I haven't seen it either. And I'm going to be completely honest with you. I was in Florida, one of the hardest hit areas of the housing market the last time when it came to price reductions. But I also saw what happened when the prices went up. Every single week, houses were going up $10,000. Every time it turned around, somebody would put a for sale sign in front of their yard and have an open house, and the cars were lined up around the block to get into these little 1,500 square foot houses. My house that I bought for $135,000 overnight, within 6 months, went up to $230,000. And then by the time that it was at the peak of the market, it was at $385,000, which was absolutely ridiculous and stupid. I couldn't believe it. My mind was blown. It had readjusted by the time we went and sold our house so quickly, because you got to remember, this was in a 2-year span. So this was in 2006. It had gone up to 385, and then it started ticking down. We sold our house in 2007. We sold it for $235,000. Remember, it was up all the way to 385, which was stupid. Then it went down to the price that we got. And then that man who bought our house for 235 ended up having to refinance the house. He had his whole loan adjusted at 180, which was probably, if it was a market that was moving in the direction of normal pace, that would have been the normal price that would have been appreciated in over that period of time. He lost out on that, I just don't see home prices unless you live in an area that has a ton of new construction, right? So I'm talking like, your Austin, Texas, and they've already seen a 30% price reduction from the height, but it still isn't a crash because people have a huge equity position in their homes. The people that are most affected by it are new home builders. And then people that bought at the height of the market. But I'm not seeing that style of what happened. It was like a light switch too, because it was like all of a sudden homes were going like crazy, and then all of a sudden I see one for sale sign, and then another one, and then another one, and another one, and within a 4-month period, all of a sudden there were just tons of for sale signs. It was like panic selling. I'm just not seeing that. And I if you're seeing that in your area, please let me know, because I'm really interested in some of these areas. Because even, the headlines always talk about Austin, Texas, and how much value it's lost, but I'm not seeing panic selling like I did in 08. I'm going to go on to my I'm actually going on to my live stream right now because I can't see the poll. But maybe Debbie Brady, you can tell me what the poll says. So MHO8 says 100,000 HOA assessment, walk away is somebody else's problem. That's what a lot of people are doing. So a lot of elderly are doing that, but then they're at a lot of elderly are doing that, walking away, but they're in a predicament because where do they go? Where do they go once they walk away from that house? Some of them are moving back in with family. It's really sad. Frank says the condos are going to crash hard. Yeah. Tip, always profit from a crisis. If a condo prices crash, be ready to buy. Like, wait until it gets low. Wait until it gets really low. That's the whole thing. And, I did a short about this because a lot of condo places, because they can't recoup from this, they're turning those condos into an apartment complex. They're not reselling them. They're turning them into an apartment complex. That's what they're wanting to do. Seth says commercial real estate has to be refinanced in the 2026 in billions. It will cause banks to tighten lending, bailout, or defraud. Yep. That's what some people are saying. Nearly a 40% vacancy rate in Denver commercial market. I'm just looking through the see if there's a question in the stream, and I'll go ahead and put it on the stream. No more questions. Debbie, if you would do me a favor and put in the chat what the poll results are, and I will read those numbers. I was asking if you guys are seeing home prices like drop drastically in your area, if you're seeing a lot more, because according to the headlines, sellers are taking a bath, but that isn't true of all areas. It's not nationwide. And that's, that's what, that's what they're saying. That's what Fox News is saying, like nationwide. You're getting the Black Friday sales is what they said. I got to show you this headline. Black Friday Black Friday home sales. And it was so weird to me cuz I'm like why is this let me put real estate. Why is everybody showing this same clip? News. Okay, here. Let me show you what it says. Like this is so weird. Look, Black Friday home deals. Uh housing market, Black Friday deals in the housing market. Realtor.com, Black Friday bargains, 5 and it's like Black Friday for home sales. What in the world? And if you read or listen to it's like they're reading the same exact script. It's very bizarre. So bizarre. Don't do it. All right, here's what Debbie says the poll says. The poll question was a seller slash prices. What are you seeing? Big drop. 13% of you saying a big drop. 50% of you saying a small dip. 23% say it's flat, and 14% of you say it's going up. I'd say a small dip. I agree. I think it's a small dip. It's a blip right now. It's not a fire sale like it was. In some areas, in some aspects, like somebody was talking about the condos, they're getting hit, and they're getting hit hard. And I would be careful too. Like, is that condo association going to turn the rest of those condos that are remain vacant into an apartment complex? I don't know if I'd want to own a condo that's going to flip into an apartment complex. That would really bother me that I own that space and you have renters moving in and out all the time. It's meant to be a home. You know, maybe I'm wrong, but I wouldn't do it. MHOA says that they're trying to so hard to get people to back downtown. Nobody wants to go there anymore. That was true of Orlando. I'm sure that's changed though. Yep. Okay, I'll just leave that there. Who's up first has a question. I use ChatGPT and Gemini all the time to write code and solve tech problems for work. I no longer use Google. How will AI help to change the house buying, selling for the next 5 years? So it really can be beneficial, but be careful with AI when it comes to negotiating or writing any kind of legal contracts. You can use it for like addendums, creating lease agreements, any kind of like question. But sometimes they quote law that doesn't exist, and they use verbiage that isn't consistent with your state's verbiage. Like here in Louisiana, the way that we talk about real estate and how it's written on paper looks completely different than the rest of the United States because we are under Napoleonic law. AI is, again, a useful tool when it's used correctly. I think it's great for all sorts of things, but it also lies or just makes up stuff. It makes up crap all the time. Matter of fact, I use it very sparingly because I find that it's a useful tool, but it kind of pushes me into wanting to think or in another way, and I'm like, that's not what my audience wants. But it I know that a lot of real estate agents are trying to game the system as far as getting their names at the top of AI. Like if someone was to type in who's the best real estate agent in Colorado, and it will give you a name. And the way that they do that is they have other people write blogs about them. They try to get on podcasts. If you could see my inbox of how many real estate agents want to get on my podcast, because it helps them rank on AI to be at the top. AI is a good tool, and it doesn't have all the information that you need, especially when it comes to pricing and pricing of homes. Like if I was to do a CMA, cost market analysis, using AI, it's wrong. It's always dead wrong, like a lot wrong. And the difference between the tools that we use as real estate agents. It's not there yet, but it's definitely it's changing everybody's life more than anything that I can think of growing up. With the invention of the internet, I would say that AI is the most society changing tool since the invention of the internet. Right. The second thing I would say is social media. So it was like the internet, social media, then AI. There's people that use it for everything in their life, but I wouldn't trust everything that you, as far as information wise, through AI, because it lies. David Matney says we're seeing some softening in prices, more inventory, back to normal market. I wouldn't mind normal. I don't want to see a crash. I mean, I like a negotiation. I do like it better when it is a buyer's market. I love negotiating, especially when I know that the seller has a lot of equity to play with. I like to negotiate a really good deal for the buyer. And, I'm not that I want to rake the seller over the coals or anything like that. But, especially when you're working with first-time home buyers, there's so much more money that they need as far as closing costs, and there's all these unexpected costs. You got to pay for the appraisal, then you got to pay for the home inspection, and then then you got to get a survey, and then they have to buy all the stuff to get into the house, the new curtains and everything, so that like the expense for the buyer is a lot. So I like to negotiate a deal for a buyer. So who's up first has another question and says, will AI replace real estate agents? Example, we only need 2 agents, not 5 at our agency. Will it reduce transaction prices? Everything's negotiable though, right? So nobody has to use a real estate agent when negotiating for a house, right? You don't have to. When you hire a real estate agent, you're hiring them for their expertise in that field, understanding the market better than anybody else. I know that you have worked with really crappy real estate agents, and I know that you've worked with really good ones. A good, experienced real estate agent is worth their weight in gold. Like I've had crappy ones and have fired them. When we moved here, I was recommended an agent and he was terrible, absolutely awful. And then we got very lucky because we saw this billboard of a lady and we called her and she met us. She just finished an open house and she met us and showed us a bunch of houses that evening. And I had young kids in the backseat of the car and she helped us the whole way through. But she was a seasoned, well-informed, understood the market, understood pricing agent. That guy wasn't. I don't mind if there's a thinning of the herd of real estate agents that are not in it to help the community at large. I think it was necessary, especially after what happened in the last housing boom. Everybody had their license and we saw some bad transactions happen then. And so now that there has been a little softening of the housing market, you see a lot of those agents that can't produce or help people in the correct way disappear, which is not necessarily a bad thing. So if AI gets rid of a few more agents that can't keep up and satisfy a clientele, maybe they shouldn't have been in it in the first place. Just my personal opinion. I'm going to get some crap from that. So anyways, I appreciate everybody putting up with me today because like I said, I was running this stream on my own. I normally have Eddie here with me and he's not. He's out of town. He will be back soon and we'll be running this together as a team, so it won't be so chaotic. If you guys need to get a hold of me, I don't even have my website, but I'll tell you what it is. KristinaSmallhorn.com. Just go ahead and click on any of the pink buttons and you can get a hold of me by filling out one of the forms. Leave your phone number so I can give you a call and we could talk about your real estate needs. If you want to listen to this and share this as a podcast, I actually put this audio recording from this show on everywhere you listen to podcasts. I mostly do that for people that are on the road. Truck driver got a hold of me and said, "Hey, I'd really like listening to your podcast. Live streams, but I can't hear it. It buffers all the time on YouTube. If you put it on a podcast, I'll be able to listen to it." So I did that just for one person. So if you haven't wanted to share it and you want to listen to it at the gym or you want to share it with other people, go ahead and click on anywhere you listen to podcasts. Kristina Smallhorn, Real Estate for Everyone. This episode will be uploaded tomorrow at 5. What time? 5 a.m., 6 a.m., somewhere around there. Will be uploaded. Eddie usually does that. I'm going to have to figure out how to do that. That's an Eddie job. Oh my gosh. All right, everybody. I hope you have a fantastic weekend. If there's anything that happens in the real estate market that needs to be addressed next week, put it in the comments section and we can talk about it. This was fun all the same. Even though I was running by myself, I was a little nervous. I appreciate everybody being patient with me. And I love you very much. I'll see you next week. Mwah! Be good. Stay out of trouble and get some real estate deals. I want you to.